Hi, Davo.
Hi, Wilfred.
How's your salamander grooming business going?
It sucks. I'm fed up with all these tiny little transactions I have to record in my journal thingamajig. I mean, I bought a coffee for a meeting the other day, and it only costed $2, but I had to record all that in multiple journal entries.
Seems like you need to set up a petty cash fund.
I'm not being petty. It's really tiresome.
No, you doofus! A petty cash fund is an amount of cash kept on hand to pay for minor expenditures because it's burdensome to use a double-signed cheque or authorised electronic transfer and record individual journal entries for small amounts. A petty cash fund is an asset account set at an amount that the company deems appropriate.
Oh my gosh, I want it. Let's set it up for my business.
Okay, calm down. Well, the first step is to establish the fund. To establish the fund, a cheque must be written for the amount allocated to the fund. This cheque must be cashed and the money placed under the control of a single person called the custodian. Doing this is a way of establishing responsibility, one of the 5 control activities. So, Dave, let's allocate $100 to petty cash for your business. In your journal, as we can see here, we must debit petty cash and credit cash. This is because we are transferring $100 out of your cash account and allocating it to petty cash. Notice that there is no impact on your total asset balance because we are only exchanging one asset for another.
That's great, but does this mean I still have to make multiple journal entries every time I buy a coffee for a company meeting?
Well, no. Petty cash makes that process simpler. Let's look at step 2, making payments from the fund. To make repayments, cash can be either taken directly from the fund or employees can be reimbursed once they present their receipts to the custodian. Through the financial period, custodians collect the receipts of all payments that were made using petty cash. The important thing to remember is that no immediate journal entries are made as the money is used.
Ah, sweet relief.
Yes. Now let's look at step 3, replenishing the fund. The remaining petty cash is counted, and a cheque is cashed to bring the account balance to its original amount. Then, the receipts are counted and recorded as expenses. Dave, what are the minor company-related expenses you made last period?
$2 on coffee, $33 on postage, and $35 on office supplies.
So expenses total $70, as we can see here. Now let's say the remaining cash in the fund at the end of the period is $25, meaning that in reality, 75 got used, not 70. Okay, so we debit the expenses and we credit cash to replenish the fund, but there were $5 of unrecorded expenses. This is journalized in the cash over and short account. We debit it because a debit balance increases expenses and a credit balance decreases expenses. The $5 debit makes up for the unrecorded expenses. So the main thing to remember is that after its establishment, the petty cash account is never debited or credited. The money used from the fund is recorded as expenses in conjunction with the replenishment of the fund using the cash account.